My name is Alma. A mortgage is the biggest financial commitment most people will ever make, yet most sign one without truly understanding it. In this film, I'll take you inside the anatomy of a mortgage loan. Because knowledge is the best down payment you'll ever make.
So you want to buy a home. Maybe it's a brand new construction, no surprises, no aging roof, no AC giving out in the middle of July. Or perhaps you're drawn to a well-established neighborhood, towering trees, mature landscaping, and streets with character. Or maybe your view's the city itself, floor-to-ceiling windows, the skyline at night, a condo that feels like the top of the world. The dream is different for everyone. One thing is almost certain. You'll need financing. Mortgage. Just the word can send a chill down your spine. You've heard the horror stories, ballooning payments, foreclosures, paying twice the price of your home by the time the last check clears. I called in a favor from an old friend. I brought in the best. Rue, my friend, a Siberian kangaroo, and quite possibly the greatest math mind on 4 legs. Rue agreed to break down the anatomy of a mortgage piece by piece. No jargon, no fine print fog. Pay attention. This one's worth it.
Alma, my pleasure. Let's get into it. Numbers don't lie. So instead of talking in generalities, I built a calculator to show us the real story. We'll start with a $300,000 loan at 6.5% interest, amortized over 30 years. Then we'll dial the rate up and down to see exactly how each scenario plays out month by month, dollar by dollar. Ready to see what your mortgage really looks like? Let's run the numbers. The numbers are in, and they tell a powerful story. Same loan, same term, 6 different rates, wildly different outcomes. Monthly savings at 5% versus 6.5%, $285 a month. Interest paid at 6.5%, $328,000. Interest paid at 5%, $280,000. Your savings, nearly $50,000 straight back in your pocket. But here's where it gets really eye-opening. In your very first mortgage payment, nearly $2,000, only $271 goes toward the principal. The rest flows directly to the bank as interest. Month 1, day 1. This chart puts it in vivid perspective. The green bars represent the same $300,000 you borrowed your principal. The blue bars show the total interest you'll pay to the bank over the life of the loan at each rate. The difference between green and blue is the real cost of your mortgage. And the final chart traces the full journey month by month, showing how the balance between principal and interest shifts over 30 years. Early on, the bank wins. By the end, you do. A fraction of a percent isn't a small thing. Over 30 years, it's a life-changing amount of money. That's why finding the right rate and the right advisor matters more than almost anything else in the home buying process.
Rue, you never disappoint. Thank you for breaking it all down so clearly. You took the mystery out of the mortgage and put the power back where it belongs with the buyer. This was genuinely eye-opening.
My pleasure, Alma. Questions like yours are exactly why I built this. No one should navigate a mortgage in the dark.
From the first showing to the final signature, I've got you covered. I don't just help you find a home, I help you understand the financing behind it, what the numbers mean, how your rate affects your future, and how to make the smartest decision for your family. Because a great home at the wrong rate is an expensive mistake, and a great rate with the right guidance, that's wealth. I'm here to make sure you get both.